Okay, this is the paper 12, May, June 2021. Okay. The first question, which statement about bookkeeping and accounting are correct? Accounting is performed periodically. Periodic means that either you do monthly or you do yearly. So that is for accounting job. But for bookkeeping is doing the daily, means that issue invoice, doing the recording. That is called the daily. So this statement is correct. Accounting rely on having accurate bookkeeping record. Because bookkeeping is doing the recording, account is based on their information to prepare the financial statement. So it's need to have the accurate bookkeeping, then only can get the correct financial statement. Bookkeeping include the preparation of the financial statement. Bookkeeping is only done up to the trial balance, which is doing the recording. Bookkeeping involves the recording of the financial information. So this one is key job or main job of the bookkeeping, record financial transaction, means the double entry debit or credit, or prepare the journal. So this is a job done by the bookkeeping. So this one, 1, 2, 3, 1, 2, and 4 is the correct answer. Okay, number 2. What increase owner capital? So what we have to do is we see the debit and credit. Capital will increase when the asset increase, liability decrease. When asset increase, liability decrease, capital will increase. Bank loan extended from the 5-year to 10-year. Both also non-current liability. It will not give impact to the capital. Purchases of inventory on credit. Double entry is with debit purchases. But these purchases, when we buy, we will put into the warehouse, which is the inventory. And credit, trade payable. So purchases debit, inventory debit means that asset increase. This one asset increase. Trade payable also increase. When both increase, minus become zero effect. This is no impact on it. Purchase of machinery by check. Debit machinery, which is a non-current asset. Credit bank, which is the current asset. So here increase, here decrease. Asset, both also asset. One increase, one decrease is also zero effect. Transfer of vehicle to business from the private use. The word private use means either is a drawing or capital, because this is an asset. So we debit motor vehicle, we credit capital. So when we credit capital, it will increase the owner capital. So the answer is donkey. Number 3, William paid 500 in cash to Sonia for the rent. William paid, that means this is the expenses to William. In cash to Sonia, they mean to Sonia, this is an income. How did Sonia record? So Sonia received money, so he received cash. So debit cash, credit the rent receivable. Rent receivable, the word receivable is normally referred to the income account. Okay, next is Abdul buy all his machinery on credit. He provide the following information. Machinery at cost 30,000, 42,000. Amount owed to supplier of machinery 19,000. End year, they don't know. During the year, Abdul paid 25,000 to the supplier of his machinery. How much did he owe them on 30th April 2021? They asked for this amount. We look at this one. He buy from the same supplier. Machinery from beginning year, end year has increased by 12,000. This amount increased by 12,000. So what is this meant for? This meant for debit, machinery, and credit the supplier. Okay, credit supplier. So the double entry in credit here, and this one is the beginning of the year, supplier account. Balance brought down, which is 19,000. And this increase, we will debit machinery credit supplier. Here we'll have another entry, which is the 12,000. So end of the year, during the year he paid, that means bank amount sitting in here, 25,000. So to find the end year, how much is owing, we take the total credit, which is 31,000 minus 25,000. So we get 6,000 balance. So this 6,000 is the balance carried down amount. Okay, now let's move on. Question 5. Sula financial year end on 31st March. On 1st April 2021, there was a credit balance of 100 on Yasmin account in Sula purchase ledger. What does this mean? Here, Sula financial year end. On this one, beginning of the year, there was a credit. Yasmin account balance brought down 100. Okay, and what does it mean with this one? Sula has paid 100 too. This one has not paid. So that's why it's in the credit side. This is a current liability to Sula. So this one is not paid yet. Sula owed 100 to Yasmin. So this is the answer should be. Yasmin has paid 100 to Sula. Yasmin should be the person going to receive the money, but has not received yet. So this one have not received yet. Yasmin owed 100 should be Sula owed Yasmin. So the answer should be B. Next, Hashina buy radio from Nazni at a list price of $10 each. Hashina bought 12 radio and was offered 20% trade discount and 4% cash discount. 2 radio were 40 and returned to Nani. So what was the total credit notes amount issued by Nani? First, the purchase price is $10 and one offer trade discount. That means the actual purchase price for 1 unit is $10 times 80%, which is the $8 1 unit. And 2 unit 40 and return. The credit note issue is referred to this 2 unit only. So we take $8 times 2. So we get 16. So the amount that going to issue is $16 for the credit notes. Okay. Okay. Jama sold goods on credit. Where did he first record invoice he issued? Sold goods means sales. And he record the sales. The first recording to record the invoice is under the sales journal. Sales ledger is to record individual credit customer account. Okay. Where you record your sales account is recorded under the general ledger. Sales journal is a listing of credit sales for a month. Normally we record by month. Question 8. Which statement about 3-column cash book are correct? It contains ledger account for the bank and the cash. When there is a 3-column, you should have one more item. Discount allowed, discount received. Should be 3 items in one book. Okay. The contain ledger account for discount allowed. Okay, here they also got put. Then they separate it out for this. Okay. It record transaction before they are recorded in the ledger. Cash book perform two roles. One is in as a ledger, another one as a book of prime entry. Ledger is because it performed for the cash and the bank. And come to book of prime entry because he used the source document for the recording. So that is reason is also perform book of prime entry role. So he performed two roles. So it record transaction before they are recorded in the ledger. So this one record transaction before they record. This is the ledger already. Perform the ledger role already. So it's not before they record. It's already record in the ledger. So the answer for it should be only 1 and 2. Okay, now let's continue. Question 9. Which statement is not true about trial balance? Okay, trial balance is a list of ledger balance at a certain date. Okay, this one is correct. It's a ledger balance. It can assist in finding arithmetical error. Why? Because when our trial balance is imbalanced, suspend account coming in. So it will help to find the error. It is part of the double entry. This one, even though our trial balance seems that got debit and credit, but this is just a listing of all the account, not a double entry concept. It's used in preparing financial statement. After we done the trial balance, we can start to prepare the income statement and statement of financial position. So the answer is wrong is C. Okay, let's move on. Question 10. Which error is an error of original entry? Original entry means that the first recording make a mistake. So invoice suppose is 100, we record 1,000. That is called first recording. Sales of surplus office equipment on credit to Jeanette for 230, enter as 320 in the both disposal and Jeanette. This one is the original entry. Sales of surplus office equipment on credit to Jeanette for 230, enter in the office account and Jason account. Jason, Jeanette are 2 persons. And then also enter in the office, we should do the disposal account. Okay, this one is not. Okay, this is a more than one error. This is compensating already. Okay, more than one error. Compensating error. Sales of surplus office equipment on credit for 230, enter in the sales account. By right, should be disposal account. We go and put sales. This is a wrong account. And Jeanette account. This one, Jeanette account is correct. Okay. So this one should be only one error, but this is both also in the credit side. So this is a correct amount, correct side, but wrong account. So these two are the different accounts. So this one can be the commission. So this one, this is not commission, because sales is a revenue account, and then disposal basically is a temporary account. So this one should be classified under the error of principle. Okay, error of principle, because this is revenue section. This is considered temporary account, which is this amount should be and no recording. Sales of surplus office equipment on credit to Jeanette, not enter in any account. I mean, this is an omission. omitted to do the recording. So the answer should be this one, which is that they say that original entry happened is when your amount you started record already make a mistake. Okay, number 11. A check 85 received from Sake was credited to account of Sam. So double entry should be debit bank, credit Sake. But we go and credit Sham. These two are the same class, which is error of commission. So we want to adjust this error. What we got to do, we have to debit this Sham, debit Sham, debit Sham, debit Sham, and put back the correct account, which is credit Sake, credit Sake. So the answer should be donkey. Okay, next move on. The 12. Jama bank statement at 1st May. Show a bank overdraft of, this is a bank overdraft for the bank statement. At the day, they were unpresented check, uncredited amount. What was the cash book? Since they given the bank statement amount, and bank statement amount is 1460. So we have to add uncredited deposit, which is 255, and then less unpresented check, which is 385, and then find the cash book. So think this is a overdraft, maybe we have to put bracket plus 255 minus 385. So we get bracket as well, 1590. 1590 bracket means that bank overdraft. So cash book, if a bank overdraft, it was sitting in the credit side. So the answer should be in here. So 1590 credit balance. Okay, next move on. What is included in the purchases ledger control account? Purchases ledger control account is just like a trade payable, but it's a record the total trade payable. So what is the item should be in? Cash purchases will never appear. And since that this is about this purchases ledger control account, I just do some refresh with you first. Now, trade payable. Open a simple T account for the purchases ledger control account or the trade payable. The item in the credit side, balance brought down, because this is a liability account. Purchases return, make payment, bank. If supplier give discount, we call discount receive in the debit side. And then if we have any interest that we need to pay the supplier charge, it will be in here. It's expenses. So after that, balance carry down. So that is how we record the double entry for purchases ledger account, control account or trade payable account. Now here, cash, this one is not. This one is referred to the credit purchases. Debit written off. Here, debt written off. Debt written off is appear under the sales ledger control account. Discount allowed. Discount allowed is under sales ledger control account. Goods returned to supplier refer to the purchases return, which is appear in here. So the answer should be the D. Okay, next move on. Okay, 14. JV sales ledger control account has a debit balance. Okay, we'll put down the information. Sales ledger control account. Debit balance means balance brought down. Interest on overdue account 40. So that means we charge customer late payment. So we charge interest. Discount allowed is in here. Discount allowed is in here, 150. Both omitted. That means we have to put it in. Okay, what was the correct balance? Then calculate balance carried out. Take the total debit minus the credit. So 1200 plus 40 minus 150. So this one we get 11890. So 11890. Answer is B. 15. Which statement about capital expenditure are correct? It is money spent on day-to-day business operation. Capital is referred to non-current asset. Money spent on day-to-day, this is referred to revenue expenditure. Okay. It is money spent on purchase of a non-current asset. Yes, this one is correct, non-current asset. It is recorded in the statement of financial position. Yes, this is correct, under non-current asset section. It include expenses related to the non-current asset. Okay. These expenses is referred to the revenue expenditure. So revenue expenditure. It include expenses. This one is, I believe they are talking about the depreciation. Capital expenditure is not a depreciation. It's a total cost that we purchase for the non-current asset. So the answer is only 2 and 3. So this one should be C. Okay, next up. Okay, 16. Nia sold equipment with a net book value of 200. Net book value, that means is that take cost minus depreciation, accumulated depreciation. This proceed, the proceed of sale, that means this is a money received for the disposal, credited to the sales account, debited to the cash book. So by right, the double entry for it, we should have the disposal account. And we should put in this one, net book value, 200. And this sales proceed, which is the bank, should be 250. So this 50 is an income. Because debit, disposal, credit income statement. But they say the proceed of the sales, 250, were credited to the sales account. Sales credited 250. And debited to the cash book, which is 250. This is what is happening. But in here, we didn't do. Okay, we didn't do anything. So now what happened is we see what was the effect of this error on the gross profit and the profit. Sales affecting the gross profit. In credit side, sales is overstate. When sales overstate, gross profit also will overstate by 250. So overstate, but it's a 250 should be the answer. So since that only circle one, this two is not, that means this should be the answer already. But come back to this one, profit for the year. Why is 200? Because this gross profit increase, overstate, it will affect the profit overstate by 250. But this amount is we omitted, we didn't do, omitted. So cause the income, other income, understate by 50. So this understate by 50 affect the profit, which is also understate by 50. One increase 250, one decrease 250. So the net impact is only 200, which is overstate by 200. That's why the answer is C. Okay. Give me a minute. Okay, next question 17. Why does a business provide for depreciation on non-current asset? Under the depreciation topic, you had 3 accounting principles that you have learned. Under depreciation topic, you learn prudence, you learn matching, you learn the consistency. Prudence is talking about should not overstate the profit. So we should recognize depreciation to reduce the profit. Okay, matching is talking about the cost matched to the revenue earned or the asset used in the business. Consistency, normally talking about the method that we use. So why we provide the depreciation? To charge the cost of non-current asset against the profit in the year of purchase. Okay, it's not only year of purchase, it's every year, depending how many years that we use to calculate the depreciation. To ensure that non-current assets appear at book value in the statement of financial position. So we will do this net book value in the statement of financial position. So this one sounds like look okay. Let's later check. To ensure the matching principle apply when preparing the financial statement. This financial statement is referred to the income statement, which is the cost less the expense, revenue minus cost of sales minus the expenses. This is what they meant for matching concept. This is one of the criteria we learned. To retain cash in the business for replacement. That is not the purpose. Depreciation is not about the cash. It's non-cash item. So this one is not the answer. So these two, which one is more accurate for me? This one should be more accurate. Matching concept is talking about the cost incurred matched to the revenue earned. So there is a general idea for the matching concept. So C should be more accurate. Okay, next up. Okay, here we have a machine with an original cost of 10,000 has been depreciated for 2 years at the rate of 10%. That means if a straight line method per annum, because straight line method, we take this one times 10%. After that, we have to times 2 because it's 2 years. So 10,000 times 10% times 2 years. So should be 2,000. It was then sold for cash and loss on disposal amount. Okay, we do this double entry first. The T account for the disposal. Okay, disposal account. Original cost 10,000. Accumulated depreciation 2,000. And then after that, it was then sold with the loss. Loss on disposal is in here. This is an income statement amount 700. And the differences here 10,000 minus this one. So 10,000 minus 2007, we get 7,300. This amount refers to the bank, the money that we receive. Subsequently, a replacement machine was bought on the same date, which is this one, double entry will be debit, machinery, credit, cash, 12400. This is the money that we receive. So what is the net decrease in the cash flow? So this amount lesser than this one. So that's why it's a decrease. So we have to take 12400 minus 7300. So minus, so we get 5,001. So the answer should be B. Okay, next move on. Okay, 19. Why would a bakery business not included a value for inventory of stationery in the statement of financial position? Not included value of inventory in the statement of financial position. Stationery, normally we buy stationery, we buy pens or whatever stationery. Normally we still have some stock, but normally we won't keep in the statement of financial position under the other receivable. We will straight away charge all this stationery into the income statement as expenses. The reason is that under the accounting, there is the materiality, under the concept of the materiality, saying that if the value is not significant compared overall of your asset, then or your net asset, you can classify it under the expenses instead of put into the inventory. So here, let's see what is the example given in here. It was expected it will be used in the next few months. So if they say next few months, that means by right, this should be under the in statement of financial position, which is a current asset balance carried out. It was purchased regularly and paid for the cash. So this one, this amount is not the reason that it's not classified as inventory. It was not for resales. It's not for resale. Yes, this is one of could be the reason, because stationery, unless you are selling the stationery, that is your inventory you have to recognize. But this is a bakery. Bakery buy this won't be buy a lot. So they will not keep as a inventory. They will charge as expenses. The reason is it was very low value. That is following the materiality concept, saying that insignificant value you can charge as expenses. Next question 20. Shilpa financial year end on 30th April. On 31st March 2021, she wrote off a debt owed by Tahir as irrecoverable. So here, owed by, that means Tahir is a customer, which is a trade receivable. So which entry did Shilpa make on 31st? When we have irrecoverable, the double entry will be debit, irrecoverable debt, credit, trade receivable. If you're given the name, put the name of the customer. So the double entry, debit, irrecoverable, and credit Tahir. If the question don't have the name, then you can change this one to trade receivable. But the question got name, put the name. Okay, now let's move on. #21. How should inventory be valued? Always in this topic, very straightforward, the question they will ask. From past question until now, always when they say this topic, there's only one answer: lower of cost and net realizable value. So just in case you want to know what is cost, the key thing for the cost is the purchase price and any additional cost during the purchase to bring into the premises. For example, in our syllabus, normally we have the carriage inward. If you have other taxes, import duty, all this also part of the cost. Net realizable value is referred to the estimate. Estimate means that not the actual yet. Estimate selling price, the sales selling price, minus the selling expenses. Whatever you need to make sales cost the money, cost the sales reduce, expend part of it, that is called estimate, net realizable value. For example, you estimate your amount sales is $10. Out of this $10, you need to use $2 to do marketing or anything, or repair the goods in order to sell $10. So you only net is net realizable $8. And your cost, let's say your example, your cost, your total cost add up, purchases price is $6 and carriage inward is $1. So this total cost is $7. So now we compare. Which one is lower? This one is lower. So in this case, if we have 100 units of the inventory, we have to take 100 times 7 to get the closing inventory value. Let's example, we change the scenario. This one, the cost, we change into $11. Sorry, put $10 lah. 10 plus $1, we get $11. And you notice this one now, this one lower, this one is higher. In this case, our closing inventory, we have to take 100 times $8, which is 800 closing inventory. So whichever is lower, the key thing is lower off. Okay, next, move on. James is an accountant and operates as a sole trader. Which item would not appear in his statement of financial position? Sole trader. Okay, the key word in here, you must familiar with the different businesses. Long-term loan is he can take long-term loan from the bank. Other business also can take from the bank. Okay. Number 2, retained earning. Retained earning is referred to the company account under limited company topic, which is that you will have one section under the equity section. Equity section, you will have the retained earning. So the basic concept for the retained earning, just to share. How we find the retained earning information? Under retained earning account, we have balance brought down in here, which are accumulated profit, and then profit for the year. This profit for the year. In the debit side, we will have the dividend pay. Take note that only pay amount will appear in the retained earning, minus from the retained earning, and then transfer to the general reserve. Transfer to. This is transfer to. But in case your general reserve appear in here, this is transfer from general reserve. So there is a position of the retained earning. Next is that, so this one cannot be. So this one cannot be, cannot be, cannot be. Okay. Then next is that trade payable. Trade payable is that purchase goods. Goods means inventory. Inventory means trading account. But James is an accountant. Accounting services consider that service business. So service business do not have the trade payable. So the answer should be donkey. Okay, because if they change it to other businesses, for example, let's assuming that they change into the what business? Clothing, selling the clothing business. Okay, the seller who sell the clothing. Then in this case, this one should be appear. So take notes, because the key thing why we didn't include the trade payable, because this one providing the services is considered service account. No inventory. No inventory means no trade payable. Okay, let's continue next. Zaha is a consultant. A consultant is also provide the service. Who receive fee from the client? How would Zaha calculate his profit? For the income statement, for service account, only have two sections, income and the expenses. Okay, and then get the profit for the year. So they want to know how to get the profit for the year here. Fee received is referred to this one, fee received. Service account, consultant is a service account. Service account don't have cost of sales. Cost of sales refer to the inventory purchases. Cost of sales don't have. So A and B cannot be the answer. Fee received plus, this is minus. So the answer should be donkey. Next, what is added to owner capital to calculate capital employed? Capital employed got two components. One is a capital, another one is a non-current liability. So added to owner capital, capital is already said. So left with this one, non-current liability, which is the answer, donkey. Okay, next move on. Question 25. What is the advantage of forming partnership? They want advantage, don't want disadvantage. Decision had to be recognized by all. This is a disadvantage. Each partner responsible for action of another partner. This is not good to partner who didn't make the decision, at the end had to liable for it. This is disadvantage. Profit have to be shared among. This is also not the advantage. Responsibility can be shared between the partner. That is the one good thing. Your job will be lesser. So answer should be donkey. Next is 26. Anne and Ben are in partnership, sharing profit and loss equally. They provide the following information for the year ended 30th April 2021. What was the band's share of residual profit? Profit for the year, interest, drawing. They want share residue. So profit, interest on drawing, interest on capital, we have to minus. This is a drawing, not the interest. So don't go and minus, don't go and plus, because they didn't put interest on drawing, they just put drawing. That means this is not supposed to be added. So we take 20,000 minus 9,000, we get 11,000. So 11,000 share equally. That means A and B will get 5,005, 5,005. Okay, they want share of the residual profit. This refer to this one. So the answer should be A. Okay, next. So be careful with the word they play or they put in. Okay, if they put interest on drawing, we have to add. But here is just a drawing. No. 27. Which statement about a receipt and payment account is incorrect? Receipt and payment account is just like the bank, but this one only for the club account. Okay, club account will use receipt and payment instead of write the bank account. It includes amount prepaid at the end of the year. So this word say prepaid. Prepaid means that, for example, you have receipt and payment, end of the year, balance carried out. So this is something called prepaid. Okay, asset. This is an asset. It shows the surplus for the year. This surplus for the year, where we can see from the club account, we use the income and expenditure. So this is the account that shows surplus. Non-monetary items are excluded. Yes, this one is correct. What is called non-monetary item excluded? For example, your depreciation. Depreciation will not appear in the receipt and payment account. This is a correct statement. Next is that the balance represent cash and bank. Yes, basically in this one is referred to the cash and bank account. So the answer for this one surplus for the year is referred to income and expenditure, not the receipt and payment. So the answer in incorrect is B. How does a manufacturer calculate prime cost? prime cost got three components: raw material, wages, direct wages, and then loyalty fee, right? But this one seldom come out in the exam, which is we call direct expenses. Seldom appear in the exam. So here, prime cost, raw material is a direct material. Next is wages, is a direct labor. And then loyalty fee is the direct expenses. But here they come out these two. This one is, after we add this one, we get, if we add this total, the C, we will get cost of production. But the question asks for prime cost, so that means it's only B. Okay, next, move on. 29. NOLA provide the following information for the year ended 31st March. Drawing net asset. This net asset means that asset minus liability, which is meant for the capital. 2020, 2021, that means this is a balance brought down. This is a balance carried down. So they want to find profit or losses. We use a capital account to find. Capital account balance brought down must be in the credit side, which is 60,500. And this one carried down is in the debit side, which is 72,275. Next is drawing, always in the debit side, drawing 3900. So here want to find profit or losses, we check which one is more. This side is more. So 3900 plus 72,275. So we get 76,175. So the differences is the profit minus 60,500. So we get 15,675. So profit we get. So the answer should be donkey. Okay, let's move on. Still got some question. Okay, 30. A trader provide the following information: cost of sales 80,000, expenses 4,000, profit for the year 16,000. Profit margin. Profit margin is take the profit for the year, divide by the revenue, times the 100%. But we don't have revenue, how are we going to find it? So we put all the number using income statement format. Revenue minus cost of sales, gross profit, and then minus expenses, get the profit for the year. So profit for the year is 16,000, and the expenses is 4,000, and then cost of sales is 80,000. We find these two information. Work backward. So this one should be 20,000. This plus this equal to this. Or take this minus get this one. And same thing, to find the revenue, we have to take these two plus, which is 100,000 revenue. So we have revenue 100,000 and the profit is 16,000. So take 16,000 divided by 100,000, 16,000 divided by 100,000 and divide by 100%. So we get 16%. So in the exam question, normally they won't give you straight. So you have to find a way to understand and find the answer for it. The important is that for the ratio topic, you must know what is the formula to use. So the formula is profit over revenue times 100%. Okay, next move on. Question 31. A trader provide the following information: revenue, open inventory, purchases, closing inventory. It was found that the closing inventory should has been 400. This one should be 400. If this is 400, this one will be 2300. Okay, next up. It was found that the closing inventory should be, what was the correct rate of inventory turn? over. Formula come first. What is the formula for it? Cost of sales over average inventory. So what is our cost of sales? This one, 2003. What is our average inventory? 100 plus 400, 100 plus 400, divide by 2. Because this one average means have to divide opening, closing, divide 2. So we get 2300, 250. Let's calculate first. So we get 9.2. So the answer is 9.2 times. Okay. Next, 32. Sally business has reached the overdraft limit set by bank of 1,500 and is not able to pay its debt when they fall due. Sally is considering the following proposal, asking the bank to increase the bank overdraft limit to 2,000. Borrowing 2,000 from a relative and pay. So one by one we read because too many items. So here, overdraft limit set by bank 1,500 and not able to pay its debt when days fall. She considering the proposal, asked the bank to increase the bank overdraft to 2,000, borrow 2,000 from a relative and pay the money back in 6 months, obtain a loan from the bank 2,000 and repay in 2 years, paying the 2,000 from the personal account. That means this is the additional capital. Which proposal will improve the working capital of the, what is the working capital? Working capital is the current asset minus current liability. Which one can have current asset increase? Current asset increase because they say improve. This one increase, this one decrease. Double entries one by one. Ask the bank increase the bank overdraft limit to 2,000. So this one, it will not change it unless he go and use it. So this one no give impact to the bank overdraft. They just extend the limit only. Extend the limit unless you use it. If you didn't use it, still remain the same like this. Borrow 2,000 from relative and pay. So this one double entry is debit, bank, and credit. The loan from who? Loan from relative. Okay, loan from relative. So this is a non-current liability. I pay in 6 months. Pay in 6 months means that current liability because this is 6 months. So bank debit, as this one debit, it means this is increase. Okay, and then this one is credit. Credit for it, the 2,000. Let's say we put in this amount using this impact. Working capital equal to 2,000 minus 2,000 because this one is also increased. You get 0 effect. So this is no effect. Cannot improve the working capital. Obtain a loan from the bank and repay in 2 years. 2 years means that double entry, debit bank, credit the loan, bank loan. And this one is a 2 year. 2 year is non-current liability, 2 year. So this one not involved in here, but bank debit will increase the working capital. Paying 2,000 from Sally personal bank account into business bank account. Debit bank, credit capital. The word personal. So this one is under capital section. Bank is under current asset. So current asset increase. Capital, working capital will increase. So the answer should be 3 and 4. Okay, next move on. 33. Company X and Y provide the following. Gross profit, both profit for the year. This one is same. Okay. Which statement is correct? If you look into here, the differences, 36 minus 7, 5. Okay, we get 31.3. Here, 42.6 minus 5.4. So we get 37.2. So this is the two information that we gather. What does it mean with these two information? This is referred to the expenses over revenue, which is that how much you earn to spend for the expenses. Seems that Y spend more than the X, because the ratio is, and the percentage is higher than this. Now we do into all. Both company earn the same amount of profit for the year. We do not know. Same amount. They didn't give. This question, we don't know because they didn't give. This is just a percentage, not the amount. Company X has a better gross profit than the Y. This one should be Y have more than the X. In terms of better gross profit, Y should be better because number is higher. Company Y has a large proportion of expenses than company X. Yes, you see this one, 37 is bigger than this one. This answer should be correct. Last, the cost of sales of company X is lower than the company Y. The cost of sales, even though this gross profit formula is gross profit over revenue times 100%, which is the revenue minus cost of sales over revenue times 100%. But this question, we do not have the amount. We only have the percentage. So this one we can't tell. So the answer only is C. Okay, next move on. 34. The current ratio of X is 2 to 1. The current ratio of Y is 1.3 to 1. What is the purpose of the current ratio? Current ratio is talking about the liquidity of the business. It means that the ability to pay short-term debt. Okay, if you have higher number, it will be better. Means that $2 that I have in my asset, I can pay off my liability $1. Means I can use $2 to pay my supplier. This is enough money. But this one is I only have $1.30 to pay $1 I owe to the supplier. So this is not so good. Normally current ratio, the benchmark is 2 to 1. So now continue with the information. What does a comparison of this ratio show? X has fewer liability than Y. We do not know which one has more, but we know the ratio X should be more. But whether yes or no, this one is, we need to see the number first, but no number, only this ratio. X has more liquidity than Y. Here, as I say, current ratio talking about liquidity of the business is ability to pay short-term debt. So this one is higher than this one. This one is more liquid. X has more liquidity than Y. Y has a fewer current asset. We do not know because we don't have the current asset component for the both company. Y has more inventory than X. We do not know the inventory amount because they don't have the information. So the only information we can say that is more liquid for the X. Okay, last question. Which international accounting objective? Objective, you have four objectives. Comparability. Okay, comparability, which is this one. reliability, and then one more, relevance. Here don't have the relevance, and understandability. So number one, information. Information in financial statement must be free from the material error. This is reliability. Second, user must be able to identify different and similarity. Different similarity talking about the comparison. Okay, so the answer should be B. Understandability is talking about the financial statement is able to let the user understand it. So there is a means for so we have to follow the accounting standard to prepare the financial statement. So that is for the 35 question that we discussed. And